Smart Money this morning, and we have some advice on what to do with a short-term investment.
As you might imagine, there are many options, and to share just a few of them, we're joined by certified financial planner Jeff Rose. Jeff, thanks for coming in.
Thanks for having me.
What do we mean when we're talking short-term investments?
You know, I think for short-term, it really depends on the individual, but generally you're talking in that 1, 2, 3 to 5 year range, probably on the long side, but somewhere in that range is what we're talking about.
And where would some of this money, is like inheritance perhaps, or some kind of return from another investment?
I think a lot of people, I always advocate having an emergency fund, having some cash savings, and some people are really good with that. Some people are almost too good, meaning they have plenty of cash to take care of emergencies if something happens, but then they almost have too much money sitting in cash, making next to nothing. And what most people know, with interest rates being at all-time low, if you actually check the interest rate on your checking or savings account, you might be a little upset to realize how little you're paying. You're probably actually paying your bank to actually take charge of your money, just because that's just how low interest rates are right now.
And one of your first words of advice is to pay off debt.
Yeah, that's the big surprise. I think that many people come to me because they don't realize, where can I go make some money? And I'm start asking them questions, and well, you have this consumer debt, you have this credit card debt, you have this car note, whatever that may be, that you're paying 5, 6, 7, 8, 12% interest on, and yet you're trying to invest it for the short term. And even though interest rates are low, if you can get 3 to 4%, that's really good right now. But getting 3 to 4% when you're paying 12% on debt makes absolutely no sense.
And number 2 is online savings and CDs. Talk a little bit about that.
Yeah, so I know with local banks may not like this, but if you're comfortable banking online, it's just amazing how online banking has expanded over the years. And now you can open accounts online, have ATM access, free withdrawals, literally no fees whatsoever.
Oh, wow.
But the other thing that makes it interesting is that a lot of their savings account rates or money market rates are 6 to 8 times more than what you're seeing at local banks. Obviously, you have to be comfortable, with an online bank, but there are a lot of big names like ING, Ally, FDIC insured just like your local bank, but they will pay you a higher interest rate.
Another option here, short-term bond funds or ETFs.
Yeah, and this, we're starting to get a little bit more on the riskier side, so I just want to stress that. But if you have ample emergency funds where you've got plenty of cash and you're looking to make a little bit of interest, there are bond funds that can pay you that 3 to 4% range. Just realize that you could see a bit of a fluctuation with your principal, so I do want to warn you on that. But we do have clients that are taking advantage of these opportunities right now.
And you say become a bank yourself, peer-to-peer lending. Talk about that.
This is the one that I'm really excited about. This has really expanded over the last couple of years. But essentially, these are online websites that are basically allowing you as an investor to give loans, microloans, to individual investors. So let's say that you're an individual that you need a loan for a business, a personal loan, pay off a high interest credit card debt or student loan debt, and you don't have maybe the greatest credit, so you need some help. Well, you can actually apply online. There's 2 big companies right now called Lending Club and Prosper. So you apply just like you apply at a local bank. Then they rate you based off your chances of defaulting on your loan, so that then assesses your interest rate. So that's you as the person trying to obtain the loan. Now, you as the investor, and that's the side that I sit on, I actually will go in and invest money, but then I only loan out about $25 per loan. So you're not giving any one person a lot of money, but I've been doing this for about 3 or 4 years, and I've been averaging about 8 or 9% interest on this. It is a little bit on the riskier side, a little bit outside the box when it comes to investing, but it's something I'm really excited about, and it really has grown. Lending Club has issued out over $80 million of loans over the last couple of years, so it's definitely an interesting concept. And I've been telling more people about it because I just think it's really neat to take advantage of.
And real quick, we don't have much time left, but Roth IRA.
Love the Roth IRA. You don't think of that as being a short-term investment, but most people don't realize is that when you put money into a Roth IRA, you have access to it any time. So if you're putting money into it, even though if you don't need it for the short term, now you have a long-term investment that's sitting there, but you always have access to it in case you need it.
Awesome. Jeff Rose, thanks so much for being here. Visit goodfinancialsense.com for more information.